Welcome back, all you cool cats. Today we're diving right into the reason you came. How will the Fed's first rate cut in years affect patterns and targets on SPY and QQQ, the Mag 7, and more? Don't forget to like and subscribe for more amazing insight into where the markets could be headed from here. Kicking things off with SPY. SPY has now broken above this resistance line of this symmetrical triangle pattern that we covered in the last video. Arguably, this could be potentially an ascending triangle, but either way, the pattern target's going to be the same. We're above all of the major moving averages. However, we are also just about touching the daily upper Bollinger Band, which would indicate that we would likely see a pullback. We saw that pullback here on Friday, and now we have to see, can we confirm previous resistance as support and continue on up? Or are we going to break that and prove this to be a false breakout? If this proves to be a false breakout, then the pattern target is going to get moved up, and we're going to expect to see a pullback all the way down to basically the 200 period moving average on the daily time frame, somewhere between 515 and 520. However, if we continue to push up, we actually would expect to see SPY to hit somewhere around 620 over the course of the next few weeks. Now, of course, for SPY to break out in a further bullish direction, it would absolutely have to get above this previous support line, which has been acting as strong resistance, somewhere around 580 to 581. Remember, every day that goes by, this target is going to continue to be moving up. And to the downside, it would have to get below this main support line that has been running now for quite some time, going all the way back to like September of 2022. It's part of this ascending channel support. Taking a look at QQQ, we've got something similar that's going on here. We had this symmetrical triangle. So far, we have had a breakout, but we have to see, was this a false breakout and we're going to end up turning down? Or are we just fighting up against this resistance line here, and then once we break above it, we're going to head to new all-time highs? As you can see, these resistance lines go back for many, many, many months, and so they're very significant. Again, we have this cup and handle pattern that took many, many years to form, and the pattern target for that is actually about 530 to the upside. Interestingly enough, the upside target for the symmetrical triangle pattern is targeting somewhere around, let's just say 550 to make it even. But if this were to be invalidated and this were a false breakout, what we would actually expect to see is for this pattern target to move up from where we met resistance and then start coming back down. If that occurred, we would expect this actually to come back down somewhere between 410 and 412, which actually would meet confluence with this strong support level. And we can see that the same thing is happening on QQQ as there is on SPY. It's above all of these major moving averages. However, the second that it touched the upper Bollinger Band on the daily time frame, we had this big pullback. Is it potentially going to pull all the way back to around 472, 473 and confirm this as new support? Or was this whole thing just a false breakout and now we're going to get the true breakdown? For all my bond traders out there, we're going to take a quick look at TLT. We can see how price came up and touched the previous support line of this descending channel and currently is treating it as though it is resistance. However, we have some potentially conflicting patterns on different time frames. You can see this big rising wedge that formed over the course of multiple weeks has a pattern target that's targeting around 97, which would actually create a new higher low than before in this demand zone. However, there is also this descending triangle pattern who is actually targeting somewhere around, like 175, give or take. We could actually see price come back up and retest this resistance and confirm it as resistance and then complete this pattern target. And this is not financial advice, but me personally, I would be looking to buy calls, longer dated calls on TLT if we get back down into this demand area. Keeping in mind the yen carry trade and what dangers that proposes to the market, I think it's important to keep an eye on the strength of the dollar. And so the dollar has broken out of this descending channel that it's been in for multiple weeks, but it's still below this main resistance line. And if we zoom out far enough, you'll see just how far back this goes. I have to go all the way out on the daily time frame to see this, but you can see how far back this goes. So if the dollar is able to get back above this main resistance line in yellow, that would be a very bullish breakout. And as you can see, I'm going to draw just kind of a rough trend line here. We have a bit of a symmetrical triangle pattern here. Depending on which way this plays out, this could see the dollar heading all the way back up to somewhere around 102 almost, which would put it above this previous resistance. Or it could actually bring it back down to roughly 99.3, which would actually put it below this main support line and back inside of this descending channel. In some respects, I think any major surprises out of Dixie could actually have big implications for the market. We're about to get into the Mag 7, but if you're loving this analysis, please don't forget to share this with a friend. Even though SPY and QQQ have pulled out of their symmetrical triangle patterns, Nvidia still hasn't. Nvidia right now is actually sitting right in the middle of its symmetrical triangle pattern. So it could come all the way up to somewhere around 127, or it could come all the way down to around 108 before we actually see a potential breakout in either direction. Simply based on the fact that it's currently resting upon this main support line that goes way, way, way back, that would indicate to me that I would expect to see it to go back up first and meet this resistance before going in either direction. And I believe very firmly that whichever direction Nvidia finally takes on this breakout, it's going to lead the rest of the market. If it can break above all of these major resistance lines, it would break above its previous all-time high, and we would expect an upside target of somewhere around 170. But on the flip side, if it decides it wants to go down, it will fill these previous daily gaps here, and it is targeting somewhere in between around $67 to $70 per share, which actually has confluence with the rising wedge pattern target that we've covered previously. When we look at Amazon of the daily time frame, this was the symmetrical triangle that we covered before with a pattern target of around 210 per share. We can see we had this initial false breakdown followed by the real move like I talk about all the time. And it seems like it's struggling with this main resistance line here around 190 even. If it can break above that and continue pushing up, we still would expect it to meet this pattern target, although we can expect a potential pullback. And if it decides it wants to pull back, it may actually retest this main long-running support line and could potentially come all the way down to about 180 before it blasts back up. I'm also keeping in the back of my mind, though, as they say, gaps get filled, and we still do have this daily gap going all the way back to like October of 2023 that eventually I do believe will get filled. On Meta, we still do have this rising wedge pattern here in orange. One might argue that it's an ascending triangle. It's broken above the resistance line right now, and I think we need to wait to see, is it going to confirm this resistance as new support? So we actually may see it come back down to around 555 and then push higher. Or was this whole thing a false breakout? And if it is, we would actually expect this to come back all the way down to somewhere around 445 per share, which as you can see is a previous demand zone. And adding confluence to the idea that this is at least going to get a pullback is that the upper Bollinger Band here in blue, it's way extended above it on the daily time frame. So I do expect to see a pullback, which appears to be confirmed by this rising wedge pattern here, which would be targeting back around support, give or take. We might even see it come down all the way to around 548 before it moves higher. We've actually got a lot going on with Microsoft. This big rising wedge pattern is still targeting somewhere around 342. Of course, that pattern target can move, as we always talk about. We had this daily gap fill that occurred back on August 6th. And then we had a bit of a W pattern for win, and then we moved on up. And interestingly, if we zoom in to the 1 hour time frame, we can see we have another triangle pattern here. And this target for this is going to be somewhere around, and it depends on where it breaks from. Let's say if it were to break right now, then we're going to be targeting somewhere around 524. But if it continues on up, then maybe we would expect to see somewhere around 429. Whereas to the upside, we'd be looking at a target of around 455 to 456. Now, Tesla is a really interesting one because we have so many patterns within patterns. We have this symmetrical triangle pattern that we covered before with the initial false breakdown, like I always like to talk about, and then the real move. This is still targeting somewhere around 263 per share. What makes this all very interesting is it looks like Tesla's still trying to fill this daily gap, which it hasn't. It's come within a few cents of it and then potentially move higher. Now, if we zoom out far enough, though, this much, much larger, dare I say, massive symmetrical triangle pattern is going to be targeting somewhere around 474 to the upside, or somewhere around 77 to the downside. So I do kind of have to wonder, is this going to be the false breakout? This symmetrical triangle lead to the false breakout, hitting major resistance here, and then this turns down. Now I find Google to be very interesting because we covered the symmetrical triangle pattern in a previous video. We showed that it was targeting around 145. We got this big breakdown. We got very close to filling this daily gap that goes all the way back to like March of 2024, but we had this V-shaped recovery, appear to currently be treating this previous long running support line as support. And it's really interesting to guess, where is this going to go from here? From a technical perspective, Google is coming up on its 50-day moving average around 167. It's also below the Ichimoku cloud resistance right now. So we would expect it to meet resistance somewhere around 167 to 168. So there's a confluence here of resistance. And then if it were to break all the way up to somewhere around 170, that would be the strongest resistance from Ichimoku and close to the 100 period moving average and near the upper Bollinger Band on the daily time frame. So I think that would definitely limit how much further it can move before requiring another pullback. And we, of course, have to take a look at Apple. We can see that every time we got up to this daily gap fill here, we sold back off. So this is being treated as a supply zone. And Apple would have to get above this 230 to 231 level to see any further upside. Of course, then it's going to meet the resistance of the previous all-time high at 237.23. And one of the reasons I love patterns, and I kind of laugh when people say that they just don't work, sometimes they're just delayed, as I like to say. This was a rising wedge pattern on Apple. A lot of times these play out, but sometimes they get delayed. Apple was intent on filling this daily gap. And so once we got up here, look at this pattern target as we drag over. Once we filled the gap, look how we came down and we filled that perfectly, consolidated a little bit, then came back up, hit supply again, and then sold back off. If you can figure out a system that is replicable, you can make money over and over and over again. And just to quickly cover the futures, looking at the S&P 500 futures, we have gotten above this previous resistance line, but we're still below this main resistance of this rising wedge pattern. So we ultimately will have to get above around 58.60 to have any further continuation to the upside. And interestingly enough, when we look at this cup and handle pattern that we've covered before, the pattern target for that is somewhere around 58.50. So this would actually place us being right at that level, fulfilling that target while we're still underneath resistance of the rising wedge pattern. So in my personal opinion, could the market go much higher? Yes, it absolutely could. But I think it's in the favor of the bears despite the recent bullishness that we've seen. And just like I pointed out before, this line right here represents open interest on the futures, and we can see how open interest has been decreasing significantly month after month. That would seem to indicate that people are less and less interested in owning the overall market. And we see essentially the same thing on the /NQ, which is the NASDAQ futures. When QQQ was still underneath this resistance, NQ had already gapped above, pulled back, seemingly has confirmed it as support, and then broken back up. But again, we've reached this main resistance line, and there seems to be decreasing interest in the overall market. And I even noticed something on the VIX that I hadn't seen until more price action had developed. But when we look at the peak that happened on August 5th and we draw a descending trend line going down, notice how every time the VIX hit this trend line, it shot back down. It came back up briefly, shot back down. We are now getting very close to this main support line again. There's also a main support line here around 1550. I've got a feeling if we can break and hold above this descending resistance line, we're going to see the market start to bleed again. And lastly, we are looking at the ADD. I had pointed out this falling wedge pattern before. I called the 9/11 breakout before it actually happened. We had an initial false breakout, then we had a double bottom followed by the real move. Now we've got a bit of an M pattern. M typically takes you down. And right now, the overall market is below this main resistance line. So as long as it stays below that, I could actually see the market going into at least a short-term downtrend. There doesn't seem to be much in the way of earnings this week, so we're going to skip right over to the investing.com calendar. On Monday, we've got the S&P Global Manufacturing PMI and Services PMI coming out. On Tuesday, we've got the CB Consumer Confidence coming out. On Wednesday, we've got the Bank of Japan Core CPI coming out. I think anything that potentially could affect the Japan's interest rate is something that we should have on our radar. We've also got new home sales for August and crude oil inventories. I think some of the biggest market movers this week, though, are going to be on Thursday and Friday. On Thursday, we've got durable goods orders, we've got GDP, initial jobless claims, but the big one is that Fed Chair Powell is going to be speaking, which is going to give us more clarity on what the Fed is going to be doing moving forward. Are they going to be stopping QT and starting QE? Like, what are we looking for with that? And then on Friday, we've got the core PCE, which is the Fed's preferred inflation gauge. So that could decide what further rate cuts we're going to get. As always, nothing I say is financial advice. Best of luck out there this week in the markets, you cool cats, and God bless. And without further ado, let's get into today's trading rule to live by.